Good morning all, CamelbackTrading.org coming to you this Monday morning, October 12th. And we're starting back looking at the market profile of the SPY ETF here on Window Trader. Back towards the end of September for a reason. We talk about how markets don't go bull bear. And I want to show you what has been transpiring. So we were in balance, in a 3-day balance, right? That's a market waiting for more generated information. Gapped higher out of balance, up. So we go bull. 5-day balance, continue bull, gapped higher, fill the gap. 3-day balance, out of balance again, bull, gap held, bull, gap held, and this morning, bull, this time looks like on a weekly gap. If we gap higher, and right now we have about 70 minutes prior to the opening, it will be the 100th gap in the SPY this year. 66 upside gaps, 34 to the downside. Now we talk about how you need to get distance away from prior highs so the trend is young, right? So when you're in balance here, you finally get away. Same here, balance away, away, away. Now, however, although we're getting distance and the trend is going much higher, now you're starting to build in some really poor structure. Gap, gap, gap. We'll also get into a very, very visual level, which is all those single prints from that trend day from back on September 3rd. I do not believe that's going to be easy to get through. Right now, our high is 349.51 pre-market. Those first set of single prints started 349.41. Again, very, very visual, very, very mechanical, short-term algorithms and traders in control. I do not believe they're going to easily fill that trend day. So let's get to the destinations and a game plan. Well, right off the bat, I gave you all the upside destinations I had left, I believe, on Friday morning. So please check those out. Right now, I'm only going to give you the pre-market high right now, which is 349.51, but trading right around there. You should have all the other upside destinations. For the downside, right now your first destination will be Friday's high, which is also, remember, it's a weekly high. So this is a weekly gap. It's the intermediate time frame getting involved of 347.35. Then below that, 346.69, which is the pre-market overnight low, and then 346.52, which was the 9 wide, and then you should have all the other ones from Friday that I gave you. Again, please write these down so we don't waste time in the videos constantly giving these important reference points and destinations. So what is the game plan for this morning? Again, the gap is huge. 347, not huge, but it's over $2. So gap rules do not apply because of context for me for 2 reasons. Number 1, the gap is too high. Number 2, it's opening right now smack in the middle of where that trend day begins. So if we get an inventory adjustment prior to the opening or right after the opening and the gap becomes $1 or less, I would look to take a call play, and I would take a 347 call play that expires today versus the weekly gap. I might take a put play right around the 350 level because that's right in the middle of the first set of single prints. If we get any acceptance above 350.35 where that single print fills, I would get out of that put play and then attempt another put play around the 351.5 level, which is where the second single print set start. Third one starts at 353.16, and that's the large one. So I don't think we will take back the trend day, certainly in one day. I think the market is certainly stretched out short term. Can we get to the all-time high? Of course. I'm not saying we can't. I'm not taking a put play or taking a short because I think the market's bad. I'm doing it for 2 reasons. Number 1, it would be I think it's stretched out. Number 2, it's in a very, very visual area, and it's the Bears' last line of defense here between 349 and 355. That's a wide area to defend. So I wouldn't stay short the whole time, but at these very visual single print levels, I would. So that's early look. Again, in CamelbackTrading.org's voice channel room, you'll get the up-to-the-minute updates and trade ideas as the day evolves. And then on the charts, we'll look, again, the monthly is the same. We're in balance. Nothing's really changed in the monthly. Yes, it would be nice to come above August high, 350, 130, but that's not the important one. The important one, obviously, is September. So, and 350, 130 would be basically just below where the second set of single prints start from that day. Weekly, we're in balance, exploded out of it. So the weekly is up one time frame and up 2 weeks. The next level is the all-time high. We're going to just drive straight up there? I do not believe so. I think that day, which we'll show right here on the daily, is going to be a pretty difficult barrier to get over. This is it. This is your last line of defense if you're a bear that day. You take out that day, then the the all-time high is certainly going to be hit. Now, one other quick mention is the triple Qs. The triple Qs right now are trading at 290.90. Their all-time high is in the overnight. So they're still pretty far away from that. They're still over about $13, $14 away from it, even at the 290, 291 level. But again, their all-time high is in the overnight. So the bulls are in control. I think for the health of the bulls, it would be wise to trade sideways at some point and not attempt to just go straight up. Because then already we have poor structure from the last 2 days. We're going to have more today. It will be a house. It will be a foundation built on sand rather than on concrete at some point. Good luck trading today. Have a great day, and we'll recap at 4 p.m.